is why we passed Wall Street reform. The whole point was, even if you're smart, you can make mistakes. And since these banks are insured, backed up by taxpayers, we don't want you taking risks where eventually we might end up having to bail you out again. Because we've done that, been there, didn't like it.
A strong voice there by the president. By the way, welcome back to Hardball. President Obama there, of course, on The View, making an even stronger case for Wall Street reform in light of the J.P. Morgan $2 billion trading debacle. He emphasized, by the way, that this issue will be a driving force in the election. Catch this line.
This, again, is going to be part of what the election's about. We've got real differences here because Governor Romney, some of the Republican members of Congress, and the financial industry have been arguing that this is unnecessary, that this is impeding capital formation, it's making it harder to lend to businesses, etc. And what I've said is, look, we want a successful financial industry. That's always been one of the hallmarks of America. But what makes us the best financial industry is transparency, accountability, rules.
Wow, U.S. Congressman Barney Frank's author of the Dodd-Frank bill designed to rein in reckless Wall Street trading. And Robert Reich was Labor Secretary in the Clinton administration. He's author of a new e-book, Beyond Outrage, What is Going Wrong with Our Economy and Our Democracy and How to Fix It. That gets to the heart of it. Congressman Frank, I just want to say that over the years I've watched people like you and Mr. Dingell and Mr. Markey and people and Henry Waxman have devoted your careers, basically, and you've given up a lot in terms of opportunity cost and career opportunity to do one thing, try to keep big capitalism tamed for the average person. And it seems to me that Romney's saying, don't do that. It just seems to me he and J.P. Morgan say, leave us alone, let us make some money, stay out of our way, and the country will be better off.
He has said that explicitly. He said that we should repeal the financial reform bill. Now, you know, I wish we could go back. In 2009, we were voting on this in the House. Frankly, the bill isn't as tough as I wanted it to be in a couple of areas regarding derivatives. It's still tough enough if we get that authority fully used. But Romney said that we should repeal it. Until he was saying consistently we should repeal it. About a week ago, after the J.P. Morgan screw-up hit, he amended that to say that it should be repealed and replaced. Replacement is a new. That was the latest in what I call a series of remits. A remit is when Romney has to change his position because he's in a different political place. But by the way, as we talk now, as of a week ago, the Republicans put a bill through the committee, of which I'm now the minority leader, that would have removed any regulation about over the type of trade that J.P. Morgan was engaged in at all, whether it was done by a bank or not. We should remember, these derivatives are dangerous when they're done by banks. They're also dangerous when they're done by others. AIG was not a bank, so we have regulations that try and restrict this in particular, but there is a pending Republican bill went through our committee over Democratic opposition that says, and I'm not kidding, if an American institution conducts derivative transactions overseas through a subsidiary overseas, it's not subject to American regulation. That's the J.P. Morgan Chase case. So before the word got out that they lost $2 billion, they were prepared to say not only would it be able to be done in a bank, but there would be no regulation of that derivative transaction whatsoever.
Let me go to Secretary Reich. It seems to me, just in terms of people that don't understand derivatives, don't understand all the stuff that Mr. Frank understands, and they love on Wall Street, the more complicated, the better. Haven't they seen all the movies? Haven't they seen Hank Paulson, played by Bill Hurt, and all these guys, and Margin Call, movie after movie in our culture saying, these guys are ruthless SOBs, they'll do anything to make money, don't trust them, keep the lights on, keep them regulated and watched. They are taken, and by the way, when they get in trouble, they come up with the begging bowl. Oh, take care of us now, come take care of our billions. And they're very big on big government when it comes to saving their keisters. And yet, don't they have any shame? That's my question. These guys.
They have absolutely no shame, Chris, and I think most of the public is very skeptical and very distrustful. I mean, that's where the Tea Party movement came from, is the bailout of Wall Street. The Tea Partiers hate Wall Street as much as...
Why do they vote Republican then?
Well, they kind of feel like government inevitably is taken over by Wall Street and big government and big business. They're all in the state. They're all in cahoots together, and I think that what J.P. Morgan...
Taken over, he is that.
Yeah, he is that, and what J.P. Morgan's Jamie Dimon Diamond has been doing, and Wall Street as a whole has been trying to erode the Dodd-Frank bill, trying to provide even more license for what they were doing before. I mean, the so-called Volcker rule under the Dodd-Frank law is sort of, Glass-Steagall light, the old Glass-Steagall from the 1930s. That act attempted to draw a very
commercial
clear
investment banking. Yeah, I know.
Yeah, separate commercial investment banking. It was thrown out in 1999, and a lot of people felt it had to come back. And what happened? The Dodd-Frank Act is a great act as far as it goes, but it did not resurrect Glass-Steagall. Wall Street has been trying to get rid of even the Volcker rule, which is Glass-Steagall light, and now I think there is a political possibility. Barney Frank knows better than I do, but I think there's a political possibility to come on much tougher, at least for Democrats and the Obama administration to say, now is the time to bring back the Glass-Steagall.
I was thinking, let me get back to Barney Frank. Congressman Frank, you are a villain to the bad guys, I think. I mean, you're like Franklin Roosevelt. He used to say, I relish their hatred. I want those guys to hate me. Do you feel like that the big business tycoons that love as much cowboy license as possible to make as much money with as much risk as possible, they see you as what? Who are you to them? You're the guy that says, no, you can't play that way.
I was this. Chris, I claim to be the greatest fundraiser of any congressional candidate in America because when I run for office, I raise double money. The last time I ran, I raised several million for myself, but I raised several million for my opponent. The Republican who ran against me announced, he got in trouble, he filed his FEC forms all very badly. He said it wasn't his fault because until the primary in September, for about a year, he only raised $200,000. Once he was the nominee against me, he raised a couple of $1 million in 6 weeks. Couldn't keep track of it. But I do want to go back to one substantive point that Bob Reich made. Yes, the Volcker rule properly enforced, and I believe it will be now. People have written that off. I think it's going to be enforced, and I believe that we have the rules in there, that we have the law that will allow what J.P. Morgan Chase did to be made illegal. But it's not enough, and this is why we had it not just do Glass-Steagall. Glass-Steagall there weren't derivatives back then. There wasn't securitization where banks made loans and then sold the loan and didn't care who borrowed. We have things in there, for example, about derivatives, and even if J.P. Morgan Chase wasn't doing the derivatives, they're still dangerous. They still need to be regulated. Remember, AIG was an entity that got into serious trouble with derivatives and couldn't pay off, and they weren't a bank. So yes, I want the Volcker rule to be top,
explain the Volcker rule.
Another derivative
explain the Volcker rule in common language.
The Volcker rule says if you are a bank and you receive deposits, and because of that you get deposit insurance from the FDIC, you may do what a bank does in terms of servicing your clients, but you cannot engage in trading on your own account. You can lend money. That's what banks are supposed to do. A lot of them have forgotten that. They're supposed to take money from people who have excess capital, bundle it up, and lend it to people who are going to produce goods and services. Then we said also, look, if you have a customer, you're a money manager, you can do things for your customer, but that's the customer's money. But you can't take the money that the federal government insures and get into these bets. And by the way, I had an interesting point that the chief of staff on the committee on my side, Jean Marcellano, a very smart woman, pointed out to me this flaw. Some of them have been saying, oh, well, when you say that the banks can't hedge that way, can't engage in hedging, you're going to cut their profits. But hedging isn't supposed to be a profit-making entity, operation.
Exactly.
Hedging is supposed to be protect against loss.
Let me get back to Mr. Rice for equal time. Bob, let me ask you this about your book and about what you think this election's about. Bottom line, what's it about? This whole question of fairness, of power, what?
It's about whether we want a society in which a very small, in fact, a getting smaller group of people are going to treat it like a plutocracy in which they run the economy and they run our democracy. Well, that's where we're heading right now. This is what we're talking about. I mean, Mitt Romney is the poster child for that kind of plutocratic economy and society. And I think what the administration and what the White House, what Democrats need to do is not only link Mitt Romney to the character issue. He's the kind of person who, as a private equity manager, did this and this. I think they have to link him to the drift of this entire economy and society toward control by a smaller and smaller group of plutocrats.
It's getting more and more like Latin America was 50 years ago, 1 or 2% running everything. Anyway, thank you very much, U.S. Congressman Barney Frank of Massachusetts and Robert Rice, former Labor Secretary. Good luck with your book. It's called Beyond Outrage, and it's an e-book, which is, by the way, are getting bigger than print books.